To continue the topic of securities. Is it okay? Yes. Kenny Au, can I please invite you to the stage? So we now proceed with the topic of opportunities and hurdles in the complete tokenization of securities. And Ken Au is our moderator who will moderate this panel. And I'd like to invite to the stage also Chris Ziemkowski, Eugen Kesselman, Eran Tier, and Alexandre Kerr, please.
Thank you. Hello, hello.
Is it
Right, good morning, everyone. Can you guys hear? Yes? So my name is Kenny O. I'm the founder and CEO of a blockchain advisory company called Elevate. We have portfolio projects like the Metaverse Foundation, also XYO, some top 100 blockchain companies in the world. And here today, we're going to talk about opportunities and hurdles in the complete tokenization of securities. We have a lot of great industry experts here, starting with Chris Ziemkowski, founder of Extend Online. It's the next generation of mining, integrating AI and blockchain. You're a Silicon Valley veteran. You had a degree from Caltech in computational neuroscience.
Neurosystems, yes.
Neurosystems, right. And we also have Eugene Kesselman, founder and CEO of TapJets. You've been a pilot since 1999. And wow, you've done some incredible things, such as you've created the first STO in the United States. In the regulation DNS. And also Eran Tier, founder of LegitTech AG, blockchain solution for insurance. You've built EasySource, sold to IBM. Excellent. And we also have Alexander Kesh.
Like cash, you know.
All right, CEO of On-Chain Custodian, digital asset custody solutions. You're a former Swift Asia head of Securities and FX. So guys, we have a lot of industry veterans here, a lot of great information that we're going to be sharing today. So I would like each of you to address the issues when it comes to tokenization of securities. Starting with Chris. You've taken a company in the OTC, basically these are penny stocks. And could you advise some of the issues that companies will face?
Yes, so I'm kind of here representing the little guy. We previously had a very, very promising company, and we went to go public on the OTC QB. And I learned a lot about the dangers of what can actually happen to a company that goes too liquid too fast. So in our case, we found out very, very quickly that companies in this situation can get attacked. They can get shorted by sophisticated investors who can make a lot more money shorting and killing your token or your stock, much more so than your true believers can by going along in your company. So if I have to say one thing today is I want to make sure that everyone is aware of the dangers. If you're a startup and you go to a regulated security and get liquid, which is what investors want, that's not always the best thing for the company. So you have to be really, really careful about that.
All right, thank you. And also, Eugene, you've created the first STO in United States. Maybe you can share some of your insights around that, in regards to the issues that people can face potentially.
Well, you know, the objective of any kind of a offering is for a startup is to raise funds, and when you look at the STO, the similarities between the STO's private offering, it's one and the same things. And the things you're going to run into with the new STO approach, you have an opportunity to go borderless, right? You can go worldwide. And think of smaller companies that are in a paradigm of now operating internationally and having investors from multiple countries. How do you address the regulations within and outside US? So the first hurdle you have to overcome, you have to realize that if you are doing a multi-jurisdictional offering, is what implication it has on you, both not just from raising funds, but how you're going to turn funds into actual liquid for your company, and as well as trying to understand how you're going to manage the new shareholders, right? They're all over the place and they potentially have different restrictions on their assets. So that's the first one. I think everybody is excited to do an STO on the heels of an ICO, but you have to think hard about what is your minimum entry? How many shareholders you like to have in your boardroom? Because despite the regulations, regardless if you do an S or an D, in our case jointly, you're limited to the number of investors, and those are the people who you're going to be reporting to, and now they're all over the world. It could be as far as Africa, but simple things like even having a shareholders vote on thing now becomes an exercise, right? You have to notify your shareholders. So think about the consequences of that. And then the last but not least is you have to look at regulatory implication, such as, how does Securities and Exchange Commission in US perceives your offering compared to almost every other jurisdiction? And are you willing to comply with those jurisdictions? So collectively, if you were going to STO in the summary, thinking that it's just another version of an ICO, you're in for a rude awakening.
Excellent. So dealing with investors and also regulation is definitely very important. We'll go over more of that later on. And what about Aaron? What are some of the issues at hand today?
Well, I think that an STO is an interesting approach. On the one hand, there will be more and more, I think, regulatory implications and requirements because the regulators are not going to let it slide. And I think one of the biggest dangers is for someone to go that route and then find out that the SEC thinks that he needs to report in a certain way. You don't want to mess up with the SEC. I think that from an entrepreneur perspective, from a startup perspective, raising money is one of the goals. ICOs were nice because you can basically raise a lot of money from I wouldn't say necessarily the smartest investors. It was easy money. Which, of course, pose problems later when some of these companies vanished with the money or the money vanished without the companies. So investors are becoming more advanced, and the regulators are becoming more aware. And the question is, how do we monitor it? How do we provide liquidity and a certain level of security? Because in the presentation just before the panel, you've mentioned that the government doesn't prevent you from gambling on horses or in a casino, but it does prevent someone who is not an accredited investor to invest in an ICO. The biggest issue is that when you go to a casino, you have 90-something% chances of losing your money. When you go to, and everybody knows it, and it's okay, it's fun, whatever. When you go to an STO, people actually expect to make money. So the government views it as it has some responsibility, or the company that goes through the STO has some responsibility to make it happen. Sorry, I'm taking too much time, so.
All right, thank you. And Mr. Kesh, you've been in the industry for 20 years, so what share with us about the issues that you see currently?
So I think there's a lack of infrastructures to support the STO business at this stage. So you do have STO platforms, very serious ones like Polymath, for example, or Securities, who will help issuers find the private investors or the qualified investors that will want to participate to the primary market side of the equation. But as soon as you go into secondary markets, there are not that many securities regulated securities exchange that will be able to handle securities tokens both on a technological point of view and on a compliance point of view or regulatory point of view. You have definitely traditional exchanges like SIX in Switzerland that is looking at offering a platform for securities token trading, secondary market trading, but it's not there yet. You have newcomers, one exchange being one in Singapore, who is in a sandbox, regulatory sandbox, to try the concept of secondary market for securities tokens. But at this stage, the infrastructure is still lacking. Second level of infrastructure that is lacking is custodians, and that's what we're trying to do at on-chain custodians. So asset managers, traditional asset managers, if you want them to start investing in those type of assets, secondary market, for example, they will have to have those assets managed by a third-party custodian. That's part of the rule in many jurisdictions. So the current custodians they use, being Bank of New York, State Street, Standard Chartered Bank, they're not able to deal with those assets yet. They don't have the technological know-how. They don't have the compliance go-ahead for those type of instruments to be managed by themselves. So that's where we're trying to play a role with the challenge of being a startup, with the challenge of having no track record in terms of custody in those type of assets. So what we're looking definitely at doing is building collaboration with existing custodians to see how together we can serve that industry at the institutional level for the future growth of that industry.
Right. I hear each of our panelists mention regulation is definitely an issue that we need to prepare for. And you did mention, Alex, infrastructure. The process lacks infrastructure right now. Even though there are hurdles, what kind of opportunities do you see?
Well, I see I think we don't know what tokenization in general of assets can bring to us yet. It's a bit like predicting that we would all have a mobile in our pocket in 1994 when internet was created, a mobile that, by the way, has as much power and CPU than the computers that sent the first people on the moon. That's something that we weren't able to predict then because it was too early. I think we are too early to predict what tokenization in general and securities tokens can bring us to, but I can see some projects I'm currently working on and supporting in Singapore, for example, around real estate investments, around fine art investments, which have already concretized. So just one example, I have a friend who has a company who is tokenizing fine art. Last year they tokenized a portion of a Andy Warhol. So the ownership of most of the Andy Warhol remains in the hand of the collector, the art collector, but he was in need for cash maybe to buy the next Ferrari, I don't know. So he issued tokens that represent shares into 30% of that Andy Warhol. And that shares can be sold on tokens. So what's the interest there for the investor? Well, believe it or not, it's quite expensive to buy an Andy Warhol full painting and a Picasso, for example. The small Picasso cost $1 million for a little postcard that is not even nice looking, nice actually. So it gives an opportunity, and it's only one example, to other investors to go into a space, diversifying investment into a space that they would not even imagine that they could invest in the past. And it's quite interesting. With the, in addition, there's a secondary market that can then be created around those type of assets, and that allows for getting rid of your tokens when you want to get rid of the tokens without having to wait for the painting to be effectively sold on the market, or without having to wait for the art collector to buy back his equity.
Wonderful. Adoption is currently happening. It's just a matter of education, which brings the next question I have for Aaron. Yesterday we mentioned about what kind of blockchain, right? We
Yes.
discussed enterprise or community. What kind of opportunities do you see around that?
Well, when I look at tokenizations and exchange platform for this, we already have some examples like NASDAQ and other electronic stock exchange or bulletin boards that allow trading and securities. So one of the issues we discussed yesterday is why blockchain? A lot of potential investors are asking me when I talk about ledger tech, why blockchain? Well, what are the advantages of blockchain in insurance? And I have many examples. The question is, what are the advantages of blockchain in security? Because there are other exchanges that are providing these capabilities now without blockchain. I think there are more than one advantage in why using blockchain. Transparency, for example, increased security, but I also don't think that this kind of exchange can survive on traditional blockchain platforms like Ethereum and so on. It needs like enterprise-grade blockchain, something like Hyperledger or R3 or something with a limited consensus mechanism. Because at the end of the day, as an investor, you want some regulations. Let's take your example about tokenizing 30% of an Andy Warhol. Who's going to make sure that this Andy Warhol painting is kept safely? Who's going to make sure that if it's being sold at the right price? Who's going to make sure that I actually get my money back when there is a liquidity event? So there are a lot of questions, and some of them have been answered in traditional markets today. Take real estate funds like REIT funds, where you can, it's not really tokenization because there are no tokens, but you can invest in a share that represents a collection of real estate properties, and the value of the share is linked to the value of the property. So there are mechanisms to do it today, and as an investor, I would like to be assured that someone is watching my interest. Otherwise, it's a perfectly good way for people to just get away with my money. So.
But if I may add on what you just mentioned, sorry to jump in, but the art example is actually a security, so it's actually a share in a fund, in a Cayman fund that you buy, and everything is actually managed like if it would be an ETF or a regulated instrument.
Perfect. So that's a good answer.
And exactly. So that's the purpose, right? Is to build, to bring different types of investments, making them more liquid, more accessible to different size of investors through a process that already exists and is already regulated.
Mm-hmm. Excellent. So Eugene, you mentioned there were some hurdles that you ran into during the STO process. Now that you've done this successfully, why don't you share with us a few insights here?
Since the conversation kind of went of trying to hang 1/3 of a painting on the wall, I'll try to take it from the investor side as well as the issuer side. Mm-hmm. There has been a lot of issuers who still believe that we live in the ICO world of non-reporting, right? Our company in STO published financials, roadmap, and all underlying documents publicly. As a matter of fact, if you bought a single STO token, which is $1 only, you will receive a quarterly report with financials. So when it comes to regulation and accountability, as an issuer, you have to assume an STO just like an IPO. And why wouldn't you want to report to your investor on success, potentially future round raising, or to stimulate the interest in your company even in the marketplace? You can talk all you want about successes of the company, but your financials and your press releases about financials probably will stimulate more interest. Now, I still don't understand someone who would buy 1/3 of a painting, or in the case, invest in a company that has no reporting structure established.
But you would understand fractional ownership of jets, right?
I understand fractional.
But you would invest,
But you can't fly it.
Right,
but you invest in a Cayman fund, probably.
Right,
Same thing.
and the reason why I'm saying that the situation on the investor side, the investor is blindly investing in a security that doesn't have an exit strategy or has an exit strategy on a fractional if there's a certain set of rules that executes, right? The hard rules have to execute when the painting has to be liquidated. When you have these rules and they're vague, why would you invest? Because in the end of the day, STO is a security of some sort, either in an equity in case of REITs, in an asset, on a fractional in the aircrafts. There's a tokenizing aircrafts now too. But in reality, the caution to investors or hurdles that most of the questions we had to answer is, what is that am I getting? First question you asked, what is it I'm getting? So the answer is you're getting a stock or you're getting a something. Something has to be clearly defined. When you do that, that's the last part of it, then there's no issue with SEC because SEC clearly understands if you have an object that is legal to sell or offer, and it's been offered in a certain proper ways to people who properly can buy it, you have no issues with SEC. Our SEC filing on Edgar took less than 16 minutes, and it was accepted within 3 hours, right? Doing STO is not hard if you approach it with accountability. But if you approach it as an ICO or a quick fix or a bridge loan, and you have expectations that all of this is going to happen and provide you liquidity, I think investors should see the signs, they should examine the signs, and at the same time take steps to ensure that the STO is just not another synonym of ICO.
So, Eugene, you mentioned, though, that you didn't understand how people could buy a third of a painting that they could never take delivery of, but clearly you can buy a third of a gold brick sitting in a bank vault somewhere that you can never take delivery of. What's the difference between buying a third of a rock and a third of a painting?
So I can answer your question. I've looked at it from an investor perspective, right? And I don't want to name the names, but if you look at certain fractional STOs that are available right there, I don't see a clear path to liquidation that is defined in a binary way like a smart contract would be, right? Not subjective way, but a clear definition. Now, maybe I picked the wrong example as a painting. Maybe there was a clear definition outlined. But I would say 7 out of 10 you're going to look at today don't have a clear execution path from what is that fraction. You know, it's like buying fractional ownership of apartments, or they call them timeshares. What's the blockout date? At what scenario it liquidates?
You should look at it as an ETF. This is a financial vehicle that under this financial vehicle happens to be a third of a painting. But it doesn't matter if it's a painting or a gold bar or a collection of real estate properties. What you're doing is linking your investment to the value of, let's say, modern art in one case, or real estate in a certain region in another case, or the price of gold. That's what you do. But since you cannot buy a gold bar and store it in your safe, maybe you can, but I mean, then it might not be as liquid as you want it to be. Then someone else is buying the gold for you, hopefully is properly regulated, and based on the price of gold, then the value of your token is either increases or decreases. It's very simple.
But in the United States, we had a very interesting time around 2008, 2009 called derivative contracts, right? So let's just remember what that was, right? How is that not taking a third of something and reselling it and tokenizing it as a contract to someone else?
Yeah, well, it's reselling something that was resold, it was repackaging with 5 layers of...
But with the exchanges today lining up, the minute...
And that was regulated, by the way.
Yes. But even it was regulated, right? But with today's exchanges, literally, when you close an STO, you make an announcement. There's 500 calls into the office of every exchange you can dream of, and essentially they're a derivative contract now. IEO is a derivative contract under ICO. And what we're trying to do here today is to prevent another wave of ICOs. And that means either hard regulation that doesn't exist, we all know it doesn't exist, or transparency. Because I got into the crypto, personally, why I believe in it, is because it provided security and transparency, as the previous speaker said. So why we are looking for security and transparency in the process and not holding the issuers accountable
I think we
to
agree.
generate that?
I think we agree that it needs to be transparent, and that's, by the way, why third-party custodians can be useful as well, as to bring transparency.
And thanks
how
God
it's
you
been.
exist, guys.
Exactly. So, but I think we all agree here. We all agree that these instruments needs to be properly, transparent and clear about all you described. By the way, they also need to be quality assets. If you always say, if you tokenize shit, you're going to have shit at the end. I mean, it's the same value, right? So the quality of assets will also be very important. And in the case of corporates that try to raise funds, equity funds through that channel, if there is nothing behind the project, it's the same challenge here.
All right, transparency, accountability, and doing it professionally is very important. So, I want to hear from each of you. What's your vision for the industry?
Okay. Look, in terms of what is an asset and what is a security, this is becoming very, very blurred as we move into the future. Anything can be tokenized, any asset. I can tokenize a table. Does that become a security? I can tokenize a tree. Everything out there is going to need to have a tokenized form. It's going to need what's called a digital twin, which represents the data of what this is. And at what point actually do we start making tokens into securities? At what point are they simply assets? And where are the regulatory barriers that are going to come into play there? This is a real question, and people are looking at it. So in the future, if we look into the far-off future, tokenizing everything becomes a serious issue. And for that, we are going to need an entirely new structure, and it's probably not going to be regulated. It's going to have to be something that individuals, that machine learning, that artificial intelligence starts to take over a lot of that, because it's simply too complicated. No one can possibly call everything a security. No government in the world can regulate everything, and we're trying to draw a very, very solid line between this is a security, that's not a security, this is an asset that can be tokenized, that's not. That line is blurry. And if you look at the future where blockchain, where artificial intelligence, where augmented reality, where all these different industries start to converge, it's very important to realize that we need to reduce the interference of government organizations. We need to reduce the need for these regulatory agencies to try and come in and do this. And we need to find ways to regulate ourselves. And we need authorities such as artificial intelligences and machine learning to kind of help with that process. And we need blockchain to keep all of those different machine algorithms honest and being able to trust each other.
Right, data ownership's going to be very important, yes. as well about digital identity.
Digital identity, again, that's one of the tokenized assets. I mean, this table has an identity, you have an identity, all of us here have identities, and we have layers of data associated with us. So who gets to own that data? What is that data? Are you a security, Eugene? I mean, would you consider yourself a security? Can I buy a third of you?
Well, depends how much you will rent for.
Exactly. Well, a consultant, you buy part of them in a way, so maybe they will become securities.
There is definitely a lot of possibilities in terms of how we can digitize data, but without also overdoing it too, right? Yeah. Okay. How about you, Eugene?
I'm just trying to figure out what the ROI on my asset will be here, but let me try to stay on the topic of securities, because I think it's an evolving thing which is now being toppled by exchanges coming up online. So short prognosis, again, from the guy in the trenches on the issuer side. I think within the next 4 months, US will issue a license to an exchange of digital asset. I know there are hurdles, but there's a few that are very close. If you take the timing of the STOs that occurred in the US, and the reason why I keep using US, we're from US first, but US seems to be kind of a needle, right, that some of the issues have to bounce off of. as exchanges come online, within another 4 months, the STOs who did get funded come to this lockup end period. So then we're going to start seeing a whole new trend of what I believe going to be what happened in the NASDAQ early days. The analyst communities, the consulting services around analyzing securities and helping define some of those terms. But you're also going to see regulators dealing with the fallout, because in the 12 months a lot could happen to an STO. And what was a transparent and a great offering in the beginning could turn into a gray something in the end. So you're going to see this filtering out of the STO, of a real meaning of STO in terms of security as a means to raise a vehicle for startups, right? And that's what I look at it. And then the last long-term prognosis of that is we live in a cyclical world, right? So there's whole series of professions around trading regular securities today, or pink slips, right? And they're already starting to move into trading crypto space, simply because it's a way to make the short money, sometimes real long money. But they're going to start to get more sophisticated, and they will require huge infrastructure changes for them to have the tools that they've built over many years on the traditional exchange. They have to migrate those tools. So, I would do an STO again if I had to. I would figure out how to do it in a way that it's less riskier in terms of the amount of people you're going to invite to the company. But I would immediately start thinking about how am I going to list that, or what's the end game in terms of exchanges. And last comment is I wouldn't rush to exchange today because of the volatility potentially of being dropped, just because you want to be and see that liquidity. I don't think the exchanges today come off of analytics data. They come off of the short trades, passion, and whale movements, right?
Now I actually have two concerns. I want to ask Mr. Cash about this. Now, when it comes to STOs, each STO token requires a KYC. Will there be a need for custodian like on-chain?
That's why I'm applying for a capital market service license for custody in Singapore, because I think that's the future. That will be, at least they will be, custodian will be part of the story. The ideal world, in my view, would be that as blockchain allows it or enables it, if you are an investor and you want to hold your assets, being securities tokens on it or on your own, you can do it. If you want to outsource it to a custodians, you can do it. But yeah, definitely, I think there's room for custodians.
Second question. I've written multiple pieces on the news about cryptocurrency hacks. Smaller exchanges, I don't think they're using custodian. Do you see regulation coming potentially, in terms of, in regards to small exchanges, requiring custodianship?
Actually, I would say that the smaller exchanges are actually using more and more custodians, being BitGo or on-chain custodian and others, because they do see the benefit of being viewed as responsible exchanges that cannot do everything. So they should focus on trading and intermediating buyers and sellers. For anything that is custodizing the assets, they should rely on third-party custodians, and that's what they do. It's the biggest exchanges that don't use custodian, that intends to do self-custody. Some of them are doing it very well because they have the focus, the right team in place, the right technology in place to do it properly. Others don't focus enough on that aspect of their business, and they get hacked every 2 weeks or 3 weeks. So I think it's a question of focus. If you're an exchange, focus on exchange. If you're a custodian, focus on a custodian. The challenge with this industry in general is that everybody's doing everything, and that's the challenge.
So if I may add, I think just not the custodian. I think we're getting to the point where if last year, same time, you would look at 4 or 5 exchanges, and you can play a pretty good game of arbitrage. Right? The industry itself kind of self-regulated this, because any sophisticated investor, not the retail, I just got one account on exchange at home, right? But any sophisticated investor today uses automatic arbitrage. So for small versus big exchanges now to enter the game of high split scenarios it's less and less likely. There are probably bad apples out there, but most of the sophisticated investors will weed them out if they don't, if they don't have custodian. So I think custodian role becomes even more important if the exchange is suspected of or has been left off the arbitrage for some reason. And what you will see is just like with consulting, right? Back in the days, when the company doesn't know what to do, they go hire consultants. They're the first in line to try to resolve this imbalance of arbitrage. Right? So I think it's a huge shift, but I believe out of, I don't remember exact number, I believe a huge number of exchanges right now is an automated arbitrage using some of the AI and technology out there. So I think custodian roles for small exchanges is a must-have within the next short amount of time where there's nice.
And that's why I left my old job 18 years there to try to build something here.
Who are you guys working with now at
So
OnChain?
we have two exchanges that we're working with publicly. So WOWO Exchange is a new exchange that will launch in Singapore, and we're also working with FUBT, which is an exchange in Hong Kong. These are small exchanges. Mm-hmm. Well, FUBT is quite big actually, but they all see the benefits of not only, of course, securing the assets for their customers and segregating those assets, by the way, when we're talking about institutional investors, but they also see the benefit of just being able to say that they are using a third-party custodian publicly on their website, because the reputation is a big challenge for many of those exchanges.
If I'm running a blockchain project, would custodian like you guys work for us? In terms of, can we trust you guys with our tokens?
Well, hopefully, yes. So that we build...
You don't expect him to say no, do you?
No. We're building technology...
No, I expect him to say he's going to go to India and die and collect the money later. But,
So we build technology and operational environment, and I'm not going to say other custodians don't. I think other custodians do exactly what we do. I guess the service will make the difference. But yes, we do. Our objective is to help token issuer manage their own tokens when they issue it, and also manage the fundraising in USDT or in BTC or in Ether through platforms like Polymath. So that's why we are one of the partners of Polymath.
That's why when we mention accountability and transparency is so important, because a lot of tokens are being centralized too, right?
I think the answer to your question lies in what's going to be the play of Tether, right? Because Tether is one of those scenarios where you have a full issuance, right, with a one-to-one stable coin that was backed up with custodian, right? So you have to think how that plays out, and I think that will address the issue of trust.
Aaron, you're the last person I'm going to ask. What would you like to see happen in the industry?
Well, I think that exchanges for security tokens will find themselves somewhere as an alternative to a stock exchange with a lighter regulation. If you take the AIM stock exchange in London as a lighter version of the London Stock Exchange or NASDAQ, I think that's what the future for security tokens exchanges would be. I think first there's going to be a hype, and people will tokenize trees and tables and other stuff. I think a lot of people will lose money. The regulator will not like it very much, and somehow things will kind of be regulated, but in a lighter version. I remember in 2008, I tried to take the previous company public on the Tel Aviv Stock Exchange. So we finished all the process. We had a prospectus that was approved by the Israeli SEC, and then the market collapsed, and we decided not to do it. So I know from personal experience the pain that you have to go through in a proper IPO, which is really not suitable for a lot of the technology companies that are trying to raise money issuing security tokens. On the other hand, tokenizing fine arts or wine. Well, I wouldn't tokenize wine, even though you can, I suppose. There are mechanisms for that exist today, and actually, I see no advantage of doing them in a security token exchange. On the contrary, I would like these events to be heavily regulated, so that someone makes sure that the Bordeaux I invested in is kept properly and not being drunk by, let's say, a drunken custodian.
Hey, Aaron, let me ask you a real quick question based on what you just said. Now,
We have a minute left.
We have 1 minute. Can you just comment on what is the advantage of doing an STO versus just buying a shelf company and doing OTC trading that's been going on for 20 years?
In 1 minute.
Yeah.
Well, I have a dirty joke for it, but this is probably not the right forum for that. So after, well, buying an OTC company and starting to trade is a backdoor. You do it if you cannot walk in the main door, you'll do it like that. But if you can, why would you? Otherwise, there will be almost no IPOs. People will just buy.
But is an STO different? I mean, how is an STO better than just doing that?
It's less regulated.
Is it? It uses the same rules.
Hold on a second. So your question is, what's the difference between STO and pink slip trading, right?
Yeah, I mean, basically, what's the...
STO, I don't think definition STO. STO is a security offering that is encoded in the token. In case of Delaware, it's just instead of having an Excel spreadsheet for the list of your shareholders, you have it on the blockchain. So let's don't confuse that listing on exchange. Yes. How is the exchange trading IEO is different from a pink slip. Both of them in the current state as a high volatility for a startup who doesn't have an and solution or a high liquidity. If you're a REIT, it doesn't matter today because you have a hard asset behind it and you're buying a specific share. But if you're a startup who just raised, let's say, $20 million, and you're going to put all this liquidity for gambling on exchange or pink slips, it doesn't really matter. The results are going to be obvious.
Let's have a separate conversation around this. Let's get a quick picture.